Ron Plain, an extension economist with the University of Missouri-Columbia, talked with us on Wednesday about input costs, news from China, and overall meat supply.
We're looking at a situation where the amount of beef we expect to have on the market here in 2012 is down 4.5%, maybe 5% compared to a year ago. Also looking for less chicken. So that sets us up a situation where even though we may have 2% more pork this year than last year, we're still likely to have very good hog prices. And for consumers, it means that bargains in the meat case may be kind of tough to find.
So those corn and bean prices then, if we're seeing less beef, less chickens, do we have any worry at all about shortages in corn for feed?
Well, yes, feed is likely to continue to be very expensive. The total feed supply available for livestock and poultry in the United States is forecast to be down this year for the 4th consecutive year due to not such a wonderful growing season last year and kind of disappointing corn and soybean crops. And also, we keep using a lot of corn to make biofuels, and so a very tight feed supply here again in 2012.
How are these going to affect the break-evens? It's when we go into $6.50 corn, which we might see if South America really has weather issues going forward. What does that do to the break-even for the hog farmer?
Well, we had the average break-even last year in 2011 right around 66 cents a pound on a live weight basis, and it's looking like we're probably going to be there or possibly a bit higher. We may see break-evens up close to 70 cents this year. And really, whether it's going to be a profitable year or not for hog producers is a little too soon to tell. Over the last 3 months or so, about half the time when you do a break-even analysis, it looks like it's going to be positive. About half the time, it looks like red ink ahead.
Well, that's where the break-even comes from then, Ron.
That's right.
Winter farrowing numbers up?
Yes, USDA's December hog and pig report predicted almost 1% more sows to farrow this winter, December, January, February. The good news in the report was spring farrowings, March, April, May, forecasted to be down almost 1%, and that was a bit of surprise.
And when these pigs go to market, Ron, we're seeing some big slaughter weights come across.
You're absolutely right on that. First week of this year, barren gilt weights in Iowa, southern Minnesota, 278 pounds, an all-time record high. It's been a mild winter, and pigs like this weather, and so we've had good rates of gain and growth, and some big hogs going to slaughter. But in general, we increase slaughter weights about a pound per year, so we can probably expect about 0.5% more pork next year just due to increased slaughter weights.
Well, then let's talk about that slaughter. We mentioned a little bit in the beginning about when you get to that meat case, but we're not going to see any relief, are we, from retail pork prices as a consumer?
Probably not. We do expect more hogs to be produced this year. My forecast is a 1.9% increase in hog slaughter compared to a year ago, probably about 2.3, 2.4% more pork. But because of a tight supply of other meats and because of strong pork exports, we had a record year in 2011 as far as pork exports are concerned, and may well do better this year. So it's going to be a pretty tight supply of meat in the grocery stores.
When we look at exports, Ron, just one thing to note, China did report 1 case of foot and mouth disease. They culled around 71 pigs. Is that something that you look at now and say it could affect, or not until you see more cases in terms of Chinese exports?
China is, of course, a big player. It's the world's largest producer, and right now they're importing a lot of pork from the U.S., and that helps. They're continually battling different disease problems. They're not a big exporter, so foot and mouth disease isn't as big a problem for them as it is for other countries, but they've battled PRRS and other diseases recently. When they fall short on production is when they tend to import a lot of meat, and the more disease problems they have, the more pork we're likely to send them, and that's positive, of course, for our hog prices.
So quickly, Ron, going forward into February, nowhere to go but up for prices?
Yes, the seasonal trend is up from the start of the year. We've had a few more hogs slaughtered here in December and early January than we expected. We're probably going to see that drop off a bit, and yes, higher prices, and most likely weights will drop off a bit. So we should see an upward trend as we move on through winter into spring.
And just to clarify the case in China, the Chinese Ministry of Agriculture said this week that foot and mouth disease was detected in 24 live pigs in the east central region of the country. Those 24 and others raised with them were culled, and the ministry claims the problem is under control.